think of energy to a large degree as more driven by than driving, the global economies. Over the past year or so, we've had, generally speaking, as you very all well know, not only extremely low natural gas prices, but extremely, almost unprecedented, unless you go back to the decade of the 1990s, low oil prices. The U.S. is the largest producer of natural gas in the world. A very close second is Russia. Russia and the U.S. are going to get an awful lot closer competitively in the gas market in the very immediate, to some degree, current market environment, because Russia is by far the most important supplier to Europe. So how Russia prices, how aggressively it sells into Europe will have a pretty direct bearing, to some degree, on prices of gas in North America. Again, I come back to the point that what matters is price. There's a coal industry here in the U.S., much smaller than it used to be, but it's the competition between gas and coal in the electric power market that I have to be very concerned about. The more nuclear, the more solar, the more wind. You could say in the past 5 years or so, the tremendous expansion of solar energy in the lower 48 states has essentially displaced several billion cubic feet a day of natural gas demand. That's a pretty big number. Whether you're looking at gas demand in the power market itself, which ranges between 25 and 30 billion cubic feet a day, 3 billion is not inconsequential, or whether you're looking at the total natural gas demand in the U.S., which is currently in the neighborhood of 75 to 80 billion cubic feet a day. Well, if 5 years or so from now, 80% of lower 48 production is going to be coming from these non-conventional resources, and that percentage was 40% approximately in 2015 and 10% 5 years or so earlier. It's understandable that there are tremendous boundaries to accomplish with regard to improving the technological recovery from those unconventional resources that we haven't scratched the surface of yet.